Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. What I would like to do on this segment is to take a look at the report that we just published this weekend, which is a special report for the gold and silver futures year-end swing trading instructions. And what we're going to take a look here is at the long-term, intermediate to short-term algorithms and basically how they relate to each other at current prices. The gold market, the yearly algorithms are in a new setup mode between 1086 and 1035. The extreme buy one and buy two levels below the mean. It confirms that the current price is trading at the extreme levels below the mean of B1 and B2 levels on a yearly basis, long term. So it's in the blue zone long term. It's in the demand zone, what we call long term. And this tells you that a close above 1086 will trigger a yearly buy signal with a 1035 yearly stop. So let's read it again. A close above 1086 will trigger a yearly buy signal, and you can use the 1035 as your stop for the year. Stop close only, and projects an initial target of 1156, which is the mean or the VC code for the year. A close above 1156 activates the upper targets above the mean, which are the sell 1 and sell 2 levels, or are the red levels that you see for the year between 1207 to 1277. So what this has done for us is identify the yearly outlook, and it's telling us that the market is in a buy mode between buy 1 and buy 2, between 1086 and 1035. This is the area that the algorithm is suggesting for the year to cover your shorts and basically reverse to go long. Your stop is 1035. It's in a new setup mode waiting for a signal on the yearly basis, and the signal is a close above 1086. The monthly outlook, or the monthly algorithms, are also in a new setup mode between 1099 and 1058. The extreme buy 1 and B2. Now these are the monthly buy 1 and B2. And the monthly algorithms are telling us that a close above 1099 will trigger a monthly buy signal, and you can use the 1058 as a stop if it triggers the 1099 close on the monthly. So the first one we have is the yearly look that's telling us that it's neutral, it's got a new setup in place, and it's waiting for a trigger point, and the trigger point is a close about 1086. It's telling us to buy into B1 and B2 levels of 1086 to 1035. So it's identified for us where the demand is, or where the support is on a on a long-term basis. And a close above 1099 will trigger a monthly buy signal. So the yearly would be a close about 1086. The monthly would be a close about 1099. And the weekly algorithms are also in a new setup mode between 1072 and 1062. When you take a look at the daily algorithms that we have in the room today, it's telling us the buy one level is 1077 to 1072. And so this is what I identify as harmonic timing. And this is a very, very high probability signal for us that is telling us that the day trade or short-term trend in the market has aligned itself with the weekly trend in the market, and the weekly trend has aligned itself with the yearly for the gold market at these levels. So the weekly close above 1072 on the weekly will activate a buy signal for this week. A close above 1099 for this month will activate a monthly signal. And a close above 1086 for the year will activate a buy signal for the year. So according to these algorithms that we are running here, it's telling us that potentially we're looking at the yearly lows taking place in this area of 1086 to 1035. The monthly lows between 1099 and 1058, and the weekly lows between 1072 and 1062. On the weekly, a close above 1072 will activate the weekly uptrend of 1062 weekly stop, which is telling you if you get long on the weekly, use the 1062 as your stop. And it projects the 1084, which is where we are right now. So we already are validating and completing the mean or the VC code, and if we close here above 1084, okay, this is activating the targets of 1094 to 1106. And if you look at the high here this morning, 1097.40. So this is how fast this thing is unfolding, that on the weekly it already has met the first target. And once again, closing above 1084 will activate once again the 1094 as the target, or now the highs you might say of 1097, and then 1106, which is the resistance levels or the supply levels that this algorithm is identifying for us to be. And if you take a look at the cell 1 and cell 2 on the monthly, we're running at 1187 to 1234, and the yearly we're running at 1207 to 1277. So what this is telling us is that once we activate this signal, that the target is on the yearly 1207 to 1277. The monthly 1187 to 1234. And on the weekly, we have already met, as I said earlier, the first level. We've coming back down into the mean and closing above 1084 will reactivate this signal again, triggering these codes for the weekly and also for the monthly. So these are the levels that we're going to be looking at as targets as we begin to validate and we begin to trigger and target and complete these targets here. Once we go above 1106, the target is 1187 to 1234. And then the yearly kicks in at 1207 and it goes as high as 1277. So the close this week obviously is going to be important for the weekly signal. And then we'll take a look here as we develop throughout the rest of the month for the monthly and the yearly as we end this year over the next few weeks. The silver markets, the yearly algorithms are in a new setup mode between 1383 and 1242, which are the extreme buy one and buy two levels. A close above 1383 now on the yearly will trigger a yearly buy signal with a 1242 yearly stop. So it's triggering a long-term signal for the silver market as well. If we close the year at 1383, and it automatically tells you put your stop at 1242, and then it projects the initial target of 1576, which is the yearly mean or the code of 1576, and closing above 1576 then activates the upper targets above the mean, which are the 1716 to the 1910 levels, which are the supply levels or the resistance levels, or what we call the red zones, whether you're using the daily or weekly, monthly, or yearly resistance levels. And you can see here the tremendous synergy that we already had this morning on this announcement of this horrific terrorist attack in France. The market reacted right into this resistance, and we are backing off into the level close to the mean once again. I would like to extend my deepest condolences to all of the people that unfortunately were victims of this new world activity that's going on. It seems that this is just the beginning, and I think we all have to take this into consideration, that it's just going to get worse, if not better, or before it gets better. But that is a whole completely different issue, and let's come back here in the markets and see if we can find and identify the best possible way for us to really take advantage of this condition in the marketplace. Something will always happen unexpectedly. Unprecedented developments always take place fundamentally, politically, or even economically. And so what we're doing here is we're trying to really get into sync with the algorithms now that we have been able to identify for the yearly, for the monthly and the weekly, which are the short-term, intermediate, and long-term trends in the market as we end the year. Once again, taking a look at silver, the yearly algorithms are in a new setup mode. A close about 1383 on the yearly will activate a buy signal. Once activated, we're looking at 1716 to 1910 on the upper end of the resistance levels. The monthly algorithms are also in a new setup mode between 1450 and 1342, the extreme buy one and buy two levels. A close above 1450 will trigger a monthly buy signal, and you can put a stop at 1342. Stop goes only for the month, and it projects initially the 1543 target, which is the mean for the month, or the VC code for the month. A close above 1543 activates the upper targets of 1650 to 1744. So the monthly has been able to identify for us the upper end of the ranges, and as you can see here on this chart on the right, it's the December silver futures contract daily algorithms that we trade. And if you look at the buy one and buy two levels, they are matching, pretty much in sync with what the monthly levels are doing. So you can see a convergence, you might say, an alignment is what I call of this trends, which is extremely positive when particularly you're coming into a blue zone or a demand zone, and all of the trends seem to be pointing that this level is the extreme below the mean or the average price. So look for closings, or look for the market to close about 1428 for the daily. That will activate very much the uptrend and put the market on a bullish mode. We have also seen the market here today come into this daily resistance level of about 1340 about 3 times, and this algorithm was prepared on Saturday, so it gave you an opportunity if you wanted to trade the market and use these levels as a guide. Going back to the weekly algorithms are also in a new setup mode between 1399 and 1376. A close about 1399 will activate the weekly uptrend, and you can put a 1376 stop, a weekly stop. It projects initially 1438, and unfortunately, it already met the target here for the weekly as we came into this market here overnight, and you can see the incredible synergy here as well. How the market is trading, or has been trading, between the mean or the VC code and the extreme, the first level of the extreme above the mean. And now we have gone into a bit of a correction to trade under the mean, which is bearish short term until the market can come back up again and close about 1428. The target now on this signal is 1410, and it's telling you that you be prepared to buy if it does come down there. And it's excuse me, coinciding once again with the yearly, the monthly, and also if we were to get down to 1399, it would activate the weekly. So we seem to be once again in an area where it's indicating demand, support, and the prices are aligning themselves between the short-term, intermediate, and long-term trend in the market. If you have any questions regarding this, please, without any obligation, feel free to contact me at 805 area code 418-1744, or you can reach me at support at EMA, the number 2trade.com. That is support at EMA2trade.com. Once again, this is Patrick MontesDeOca, and thank you once again for the opportunity to share this incredible intelligence with you, and I look forward for basically having a very successful week, and as we move in towards the end of the year, we'll take a look and see how accurate this information will turn out to be. Until next time, my friends, be well, take care, talk to you soon.